All right, let's talk about commodities. 2025 was, well, it was a wild ride. We saw this crazy mix of huge wins and some really surprising losses. So we're going to dive in, unpack what the heck happened, and look at what the experts are saying is coming in 2026.
And when I say wild, I mean it. 2025 was a year of extremes. This wasn't one of those years where a rising tide lifts all boats. No way. We saw this massive split in the market, and it tells this really fascinating story about where the global economy is heading.
Just look at this. The contrast is absolutely stark. You've got precious metals just shooting for the moon. Silver up a staggering 149%. Gold a massive 64% gain. But then look at crude oil, the lifeblood of the global economy, right? It fell by 19%. This split, this is the key to understanding the whole year. It's a huge signal that different parts of our financial world are feeling very, very different pressures.
So you got to be asking, how does that even happen? How can one part of the market be on fire while another is getting crushed? Well, that's the question we're going to tackle. And the answer really boils down to a few incredibly powerful global forces that are just pulling everything in opposite directions.
Okay, so to really get the big picture, we've got to start with the main event, the star of the show, gold. Its performance in 2025, wow. It wasn't just some random price spike. No, it was a major signal that some really big shifts were happening just below the surface.
And this chart right here just shows you how dramatic it was. Gold didn't just rally, it exploded. It rocketed to an all-time high of $4,550. I mean, look at that climb. This is the kind of move that makes everyone, from the biggest central banks down to the smallest investor, sit up and pay very, very close attention.
So what caused this? The key thing to understand is that it wasn't just one thing. It was basically a perfect storm of factors all hitting at once. You had the US Fed starting to cut interest rates, which makes boring old bonds less attractive and shiny gold more appealing. Then you throw in rising geopolitical tensions, which always sends investors running for safety. And to top it all off, a weaker US dollar gave gold this massive tailwind. It was just one thing after another.
But of all those reasons, there's one that just stands out because of its sheer scale. Get a load of this number. 1,000 tons. That's how much gold, on average, the world's central banks have been scooping up every single year since 2022. This isn't just a casual investment, folks. This is a massive strategic shift.
And that big strategic shift, it has a name you're probably hearing a lot more: de-dollarization. So what is it? It's pretty simple, actually. It's just countries around the world deciding, hey, maybe we shouldn't keep all our eggs in the US dollar basket. So they start buying hard assets, like gold, to diversify. It's their way of hedging their bets against the US economy and its policies, kind of pushing towards a world where the dollar isn't the only game in town.
And listen, this isn't some abstract theory. We can see who's doing it. Just look at the biggest buyers in 2025. You've got China, which has been on an absolute gold buying spree for a while now, and then other countries like Poland. These guys are at the front of the line, actively leading the charge to move away from the dollar.
So, that's the story of 2025, an absolutely historic year for gold. But now comes the million-dollar question, or maybe the $5,000 an ounce question. After a run like that, a 64% jump, what happens next? Can this thing possibly keep going into 2026?
Well, for 2026, the experts are basically setting the stage for a classic showdown. It's the bulls versus the bears. You've got one camp saying the party is just getting started, and the other saying, hold on, a cool down is definitely on its way. It really is like these two powerful opposing forces are about to collide and define the market. You've got the incredible momentum of the bull pushing things higher, and then the heavy gravity of the bear trying to pull prices back down to earth after that insane climb. So let's break down the arguments, right? The bull case is pretty straightforward. They're saying nothing has changed. Central banks are going to keep buying, the Fed is probably going to cut rates again, and people are still worried about inflation. But the bear case is strong too. I mean, after a rally that big, a lot of people are going to be tempted to cash in and take profits. Plus, if things calm down geopolitically or the economy really starts humming along, that fear factor that pushes people into gold could start to disappear.
The source material had this great phrase for what's most likely to happen: the golden breather. I love that. The idea isn't a crash, not at all. It's more like the market just needs to, well, take a breather. It needs to cool off, catch its breath, and kind of regroup before it can refuel for another potential leg up.
Okay, so let's talk numbers. What does this breather look like? Well, the forecast seems to put a potential floor for gold around $3,500. But if the bulls really take charge, the upside could go all the way to $5,000. Think about that range. That tells you everything you need to know about how uncertain and honestly how exciting the outlook for 2026 really is.
All right, so gold obviously gets all the headlines, but its story is really just one piece of a much bigger puzzle. To really get what's happening, we have to look at the other side of that huge split we talked about at the beginning. We need to talk about silver and oil. Silver's story is just fascinating, and it's why it had that unbelievable 149% run. See, silver wears two hats. On one hand, it's a precious metal, like a little brother to gold. But on the other, it's a critical industrial metal, and that's where things get interesting. The market is actually short on silver, for the 6th year in a row, mostly because demand from things like EVs, solar panels, and even AI is just off the charts. But here's the catch. Those record-high prices are a double-edged sword. They can crush demand for things like jewelry, and they make companies get creative with thrifting, which is just a fancy word for finding ways to use less of the expensive stuff to save money. And then you've got crude oil. It's telling a completely 180-degree different story. Forget supply deficits like we see in metals. Oil has the opposite problem, a supply surplus. You've got OPEC Plus pumping more, U.S. output is hitting record highs, and at the same time, demand is kinda meh. The global economy has been a bit sluggish, plus you have the long-term shift to renewables. So you have this classic imbalance, too much supply, not enough demand. And that, right there, is why its price went completely the other way from gold and silver.
Okay, so as we start to wrap this up, what's the bottom line? What are the big picture forces you should really be keeping an eye on? Because these things are going to shape not just commodities, but the entire global financial system.
There are really 4 key things to have on your radar for 2026. Number 1, central bank actions. Does that massive gold buying spree keep going? Number 2, the US Fed. How many rate cuts do we actually get? 3, the geopolitical climate. Tensions ease up or do they get worse? A change there could flip the script. And finally, number 4, and this is the big one, the US dollar. Is its status as the world's go-to currency going to keep being challenged? That question is really at the heart of this entire story.
And all of this leaves us with one last, really powerful question to chew on. What we're witnessing here isn't just a market cycle. It feels like a huge structural shift in global finance, driven by everything from debt and global rivalries to this desperate search for something stable. So as these massive tectonic plates of the financial world keep grinding against each other, you have to wonder, is gold making a comeback to reclaim its ancient throne as the one true king of assets?